Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Big borrowings ahead. The government taps the debt market for 437 billion pesos this fourth quarter to help fund the deficit. The scandal widens. The NBI recommends charges against Senator Francis Escudero and former Senator Nancy Binay over the flood control mess. And Greta returns. Climate activist Greta Thunberg heads back to Gaza, bringing humanitarian aid to the war victims. Let's take a look at how global financial markets performed overnight. Investors turned cautious as strong U.S. data casts down how soon the Federal Reserve can start cutting interest rates. U.S. stocks closed lower on Thursday after data showed the economy remains strong. Initial jobless claims fell by 14,000 to 218,000 for the week ending September 20. Revised figures also confirmed faster second quarter growth driven by consumer spending and business investment. Chicago Fed President Austin Goolsbee warned against cutting rates too quickly, saying inflation risks remain.
It's been pretty straight up for markets since Liberation Day with a few pauses. We're in a stretch here where it's 3 consecutive down days right now, but I would call them orderly down days, nothing too crazy, nothing too volatile in terms of spiking within individual sectors or even individual names that much. So I think it's a little bit of profit taking, a little bit of probably window dressing as we get to the close of the third quarter, where institutions are shifting some money around from some of the things that have been winners and starting to look for other places for that capital to go.
The Dow Jones Industrial Average fell nearly 0.4%. The S&P 500 and the Nasdaq each slipped about 0.5%. In Europe, stocks also retreated. London's FTSE eased nearly 0.4%. Germany's DAX lost 0.5%, and France's CAC 40 dropped 0.4%. Here at home, government borrowings slow sharply this quarter, even as the deficit remains heavy. The government plans to borrow 437 billion pesos from the domestic market in the fourth quarter. The Bureau of Treasury says this covers 262 billion pesos in Treasury bills and 175 billion pesos in Treasury bonds, a 36.6% drop from the third quarter program. Auctions for short-term T-bills will run from October to December alongside several sales of long-term bonds. Domestic debt has already hit 1.34 trillion pesos as of July, including bonds, notes, and bills. Borrowings help fund the budget deficit set at 1.56 trillion pesos, or 5.5% of GDP this year. What does this mean? Well, lower borrowing signals that the government is trying to manage debt more carefully, but it also means less room to spend, even as the economy faces pressures from corruption scandals and global risks. More rate cuts may be on the table soon, but only if the economy starts to slow. The Bangko Sentral ng Pilipinas could trim borrowing costs again as early as October if the economy shows signs of losing momentum. PSP Governor Eli Remolona Jr. says that if output weakens because of soft demand, the central bank will respond by lowering policy rates further to support activity. However, he notes monetary policy alone won't fix supply-driven slowdowns such as oil or food shocks. Action can only be taken decisively if weakness comes from the demand side. Infrastructure spending, one of the economy's main growth drivers, takes a big hit in July. State disbursements dropped by 25%, dragged by slow releases from the Department of Public Works and Highways. Budget Secretary Amena Pangandaman warns infrastructure disbursements may stay subdued in the coming months as probes continue into anomalous flood control projects. In its latest report, the Department of Budget and Management said infrastructure and other capital outlays fell 25.3% to 93.3 billion pesos in July from 124.9 billion pesos a year ago. A new cap on cash transactions is coming. The Bangko Sentral ng Pilipinas will limit daily withdrawals to 500,000 pesos to curb money laundering. But analysts warn it won't fully stop the illicit flows. BSP Governor Eli Remolona Jr. says that the rule targets cash transactions linked to the flood control scandal and encourages digital payments. Clients can still withdraw above the limit with proof of legitimate business purpose and bank approval. Jonathan Rovelas of Reyes Tacadong warns the policy could hurt cash-dependent businesses and exclude the unbanked if digital infrastructure doesn't improve. He adds that while the cap pushes large transactions into traceable channels, criminals will likely shift to cryptocurrency, shell companies, or trade-based laundering. The peso hits a new low, slipping past the 58 to $1 mark. Investors are rattled by the flood control corruption scandal, while hawkish signals from the U.S. Federal Reserve strengthen the greenback. Data from the Bankers Association of the Philippines shows the peso closed at 58.10 to the dollar on Thursday, down 64 centavos from the previous day. It was the local unit's weakest finish since August 1st, when it closed at 58.15. The peso opened at 57.75 and traded between 57.73 and 58.17. Dollar turnover climbed to $2.15 billion from $1.73 billion on Wednesday, reflecting heavier market activity. The Philippines takes a big step toward nuclear power. President Ferdinand Marcos Jr. signs a law creating the Philippine Atomic Energy Regulatory Authority, or PhilAtom. PhilAtom is the country's first independent nuclear regulator tasked with ensuring the safe, secure, and peaceful use of nuclear energy and radiation sources nationwide. Nuclear power generation, however, will still be governed by the Electric Power Industry Reform Act, or EPIRA, and remain under the oversight of the Department of Energy and the Energy Regulatory Commission. Now, the Philippine economy looks strong on paper, with growth holding up, inflation easing, and fiscal numbers steady. But that resilience is being tested as the 100 billion peso flood control scandal dominates headlines and protests rattle investor confidence. And these are not isolated incidents. Corruption cuts across administrations, with multiple lawmakers in both the Senate and the House now implicated, even forcing leadership shakeups. To help us break down the real economic costs of corruption to government, business, jobs, and investor trust, we're joined by Alex Escucha, the chairman of the UP Visayas Foundation and fellow at the Foundation for Economic Freedom. Hi, Alex. Good to have you this morning.
Good morning, Maiki. Thank you for having me.
Okay, Alex, these are not isolated incidents. We're talking about corruption here. Analysts say that flood control corruption is just the tip of the iceberg as it cuts across administrations, with lawmakers from both chambers now implicated. How endemic would you say is corruption in the Philippines today, Alex?
Well, as we knew all the while that it is endemic, but the extent of it, we thought it was just a flood, but actually it's now a deluge that covers all layers of the government.
Yeah.
And it is really a major economic cost. And I think we have slides to show that the total spending on infrastructure averages 1.5 trillion from 2023 to 2028, which is almost exactly the amount of deficit, which is also the amount of additional borrowing that the government has to do.
Yeah, that's right. Now we're being flooded with all of the corruption allegations. Alex, what would you say is the cost, the economic cost of this systemic corruption?
We can break it down into several layers. The first direct impact is that one, economists use the term capital to output ratio. So for every 1 million peso that you invest in capital, you're supposed to get a multiplier effect out of that. But if the spending is ghost, your output is zero. And if you go back to the 1.5 trillion infrastructure project in the Philippine Development Plan and in the fiscal framework, if we say 50% of that is lost, then that 1.5 trillion represents 5.5 to 6% of GDP during the Duterte and BBM administrations. When I was traveling in Hong Kong, Singapore, and Tokyo for investor relations meetings, the analysts were saying that the spending on infrastructure during Pinoy and GMA time was 1.1 to 2% of GDP, which was criminally low. However, it was increased to 5 to 6% in Duterte and BBM administrations. But since practically half of it is lost anyway, then the net effect really is basically just 3%, not that much of an improvement over the previous administrations.
Yeah.
This explains in big part why, despite all of that spending and the fact that the biggest increase in the debt stock is happened during the Duterte and BBM administrations, we did not see any acceleration in the GDP growth.
Yeah, correct. We see corruption in overpriced contracts, in poor quality things, and in most extreme cases, in ghost projects. And as you pointed out, infrastructure is huge and it matters. If done right, it has a huge multiplier effect because it improves our capacity to grow. In fast-growing economies, infrastructure spend to GDP, that should be 7 to 8%. In the Philippines, we're short of that at 5 to 6%, which, as you mentioned, is criminally low. Add to that, because of corruption, if that's reduced to half, that's just 2 to 3% of GDP, barely enough to move the needle. Is this why, Alex, we record gains on paper, but people aren't feeling it on the streets?
Well, we should have been growing faster than we should because, for example, in 2020, our GDP dropped by 9.5% and 19.5% in the second quarter alone, the quarter of the lockdown. During that same year, Vietnam did not slow down. It even overtook us in terms of per capita income and has continuously leaving us behind. So I take it with a grain of salt, any statement that says, oh, we are still one of the fastest growing economies in the region. Because I would always ask, in relation to what? In relation to what we should be growing according to the goals of Ambition 2040, we should be growing by 8 to 10%. And even Secretary R.C. Balisacan has issued a statement about 2 weeks ago that is no longer possible.
Yeah. Beyond the pesos lost to corruption, Alex, how does it ripple into the broader economy? Can you explain to us how it hits us through higher borrowing costs, weak investor sentiment, and in all the lost opportunities?
Well, let's break it down in terms of the layers of economic costs. One is that there is no bang for the same buck. It used to be that kung kupit-kupit lang, then there is still an output but less. But now we're talking of zero output in terms of the ghost projects. Number two, it displaces remember there was a reallocation for 3 budget years from the flagship infrastructure projects to unprogrammed appropriations. So while you take away the domestic funding for that, we have to pay commitment fees to the foreign funders which had committed to these projects. Number three, the 245 billion for flood control projects alone in the 2025 budget would have addressed the 10 to 15-year backlog of classrooms, according to Secretary Angara, who at the House Appropriations Committee hearing said the backlog is 165,000 classrooms, and yet they're given only no more than 10 billion a year. It will take them 15 years to address that backlog.
Yeah.
Then number four, we have to borrow. But the fifth item is that we have to pay interest. The budget would have to include a higher portion of higher amount of interest to be paid on that debt. But if the infrastructure project was being spent properly, the amount of borrowing would only be one half.
Yeah. we're borrowing without the growth payoff. You mentioned debt, Alex. Our national debt is now at 21.9 trillion, with 9.1 trillion added during the Marcos administration, 6.8 trillion under Duterte. Looking back at the debt to GDP ratio, that was as high as 74% under Gloria Macapagal Arroyo. It went down to 39%, a low of 39% in December of 2018. Then it spiked during the pandemic for obvious reasons. Today we're stuck at around 60% debt to GDP ratio. Borrowing at this level would have been acceptable if it were driving growth, but it isn't. How damaging is this, Alex, for our fiscal credibility, and how worried should we be that our debt is rising without the dividend payoff?
Well, the opportunity cost is this. The 5-year development plan and the 5-year fiscal framework prepared by the economic managers at the start of this administration forecast that the debt to GDP ratio will drop from 61% to 51% of GDP. That's a 10 percentage point decline. But because number one, the GDP is not growing as fast as it should, all the tax measures actually from the create more, the train, and even the last CEMEPA were actually revenue neutral. In fact, the last CEMEPA was negative in terms of revenue impact. The only thing that made it positive is because they removed the tax exemption on pickup trucks.
Yeah.
Otherwise, it would have been negative, no?
Yeah.
So when we say fiscal consolidation, the real action that needs to happen is on making sure that the spending is efficient and effective.
Mm-hmm.
But as we can see, there is no it's like we're leaking at all the seams, no? Lahat may butas eh.
Mm-hmm.
So
yeah,
that's the problem.
That's right. Let's take a look at those figures again. The debt stock by administration, let's pull that up. We had that on a while ago. When you take a look at these figures, Alex, what does it tell you, this debt picture? It varies. It tells very different stories across the different administrations. What does it tell you, Alex?
Well, I wrote an article about it in Business World that giving 25-year, at least a 20-year horizon from the time it does debt to, because absolute amount, looking at the absolute amount or increases is not meaningful per se. You have to put it in relation to the size of the economy or the capacity to pay. So it was as high as 74% in GMA's time, and that's when the VAT was increased from 10 to 12%, and then the debt to GDP ratio continuously improved the rest of GMA. In fact, during Pinoy's time, we got our investment grade sovereign credit rating, and continued on in the Duterte time. And even with the current deficits and the levels of debt, the debt to GDP ratio should is still at the 60% level. I don't agree that there's a international limit of 70%. It's relative to the economy. In Singapore, the debt to GDP ratio is 150%. Mm-hmm. In Japan, it's almost 200%. In the US, more than 150%. So it has to be in the context of all the other things in relation to the economy and how the debt is managed. Mm-hmm. For example, 80% of the debt is long-term, meaning more than 5 years. 80% of the debt is local currency. In Japan, they don't worry about 200% debt to GDP ratio because everything is in yen. So they're mm-hmm. just indebted to their own citizens.
Yeah.
So these are part of the considerations. But to me, the real problem is the bang for the buck issue. We are hemorrhaging. In other words, like in all our orifices, we are hemorrhaging money like nothing.
Yeah, it's a big concern, Alex. Our debt to GDP ratio now at 60%. As you mentioned, it's got to be taken in the context of the Philippines. In the context of the Philippines, the medium-term fiscal framework projects a decline to 51% by 2028. But with the leakages, Is this path possible? And where are we when it comes to fiscal consolidation?
That is why at the House Appropriations, at the Senate Appropriations Committee, I mean the Finance Committee chaired by Sherwin Gatchalian, that chart that shows the original forecast from 61 to 51%, but instead will just be steady at 60%, was actually a slide by Senator Sherwin Gatchalian, not from Secretary Recto, meaning Congress, the Senate, realizes that because of all these issues facing us, uh, it will not worsen beyond the 60% level, but it is not going to improve to 51% as originally hoped or projected.
Alex, talking about that double whammy, we're borrowing the same amount as we're spending on infrastructure. If the leakages were cut, our borrowings could have been cut in half. How do you quantify the long-term drag of this cycle?
Well, economists would have there's a sort of a leading indicator and a lagging indicator. The leading indicator is the amount of, just like in business, you have capex. That's why you borrow. Companies are willing to borrow to expand capacity, expand their plants, so they produce more and earn more, and from of the incremental earnings, they're able to pay their loans to the financial system and still make money for their stockholders. In the same manner, the government, from a macroeconomic point of view, investing in infrastructure. But if you're talking of bridges, roads, especially roads where it connects productive areas so the market goods can be produced, can be marketed properly, that has a positive incremental impact. But flood control is just a zero to negative impact because you're just trying to control losses. I don't really see any that much, as analysts would say, additive value. But now we're even seeing negative value because it's we have a lot. Even Secretary Vince Dizon was so stupefied that to learn that while there are master plans for certain river systems, the insertions are funding projects that have no relation at all to any master plan.
Yeah.
Or no feasibility studies. These were really just designed to be stolen or wasted.
Yeah, that's a thing. So Alex, stepping back, looking at the broader picture, how does this hurt the Philippine investment story? For foreign investors, credit rating agencies, how damaging are these, are these series of corruption allegations to the Philippine investment story?
From the macro, I think our starting point is that people tend to forget that we still have the investment grade rating from Moody's, Standard and Poor's,
Yeah, big
and
three.
Fitch. I had experience in talking to all three in my corporate job. The first thing that you would hear if they see any deterioration in the what they call the dashboard or the heat index of parameters is to warn about a possible downgrade of the outlook, not yet the rating, from positive to
Right,
or
there's
from
that
stable
indication. There's that
from
indication
stable to
muna.
negative. But in fact, the last action was actually from stable to positive. No? So that to me is a bottom line. Definitely, it is a concern. But there are two types of investors. If there are investors who are just looking from afar, remember in the whole scheme of global investments, the Philippines is basically a rounding error in the portfolio of the biggest investors. So they easily would pass by us. And that is why the stock exchange index has really not moved for the last number of years. But for those portfolio investors, part one, part two, the real foreign direct investors who have been here, who have been present here, a good number of them still continue to see opportunities. They know the strengths and weaknesses of the Philippine economy, that we still have a good, productive, young workforce. And we have one of the fastest growing populations,
Yeah.
and that is therefore a big consumption market. Remember, on the demand side, our economy is like the US, 70% consumption.
Yeah. Alex, the Philippines remains investment grade. The big three have an investment grade rating on us, the big three rating agencies. Yet foreign investment inflows lag behind our ASEAN peers. How much of this gap is corruption driven versus structural issues like energy costs and logistics?
Excellent question, Mikey. The question is, even before these corruption issues came up, because there's always a certain level of corruption in every country naman eh. But in the Foundation for Economic Freedom, we are part of a group that monitors the index of economic freedom across the world. And the Philippines ranks very well in the monetary financial management. But where we rank low is in, halimbawa, the ease of doing business, getting permits, enforcement of contracts. It takes forever to settle disputes. Uh, and we have a fellow who is advising investors across Southeast Asia. It takes only 30 days to get a major investment application approved in Vietnam. And in the Philippines, it takes a lot of time. So with or without corruption, for many investors, that is the real issue on the ground. And that is where we need a lot of improvement.
Yeah, there's speaking of improvements. You're an economist, but you're also a Filipino. Alex, how do we protect ourselves from the worst of ourselves when we talk about corruption? It's so entrenched in our institutions, but how do we break this cycle? I know you've got a list of recommended accountability bills for good governance. We're going to flash that on the screen now. Can you walk us through what you think we need?
Well, to me, at the end of the day, regardless of what happens to the investigations, you recall that every presidential term had their own presidential anti-graft or anti-corruption commission, which at the end of their terms could terminate and also be changed by the next president. What I'm advocating for is really to make this whole thing institutional, just like the Independent Commission Against Corruption of Hong Kong that was established in 1974. It had real powers. Its term extends beyond the term of any chief executive. And number one, including these bills that are being flashed, is the Freedom of Information Bill that has been pending in Congress for maybe almost more than 10 years. No? Number two, the best antiseptic and deterrent to corruption is light and transparency. And in the Section 11 of the Constitution, and even also in the RA 6713, Code of Conduct for Ethics for Public Officials, they are admonished to live modest lives in the Constitution. In the RA 6713, to live simple lives. And that could be shown whether they have increased in the SALENs. But to me, one action that legal groups like the Integrated Bar of the Philippines could file a suit in the Supreme Court to reverse the what I call a stupid rule by the Ombudsman to restrict access to the SALN, and Martires even criminalizes any comment on the SALN, which practically neutralizes the constitutional provision of the right of the public to information on matters of public interest.
Yeah, as you mentioned, Alex, we need light and we need transparency to cleanse the system of corruption. To this end, there's an avant-garde solution being proposed. Blockchain, it's moving beyond crypto. It's already being tested in government, from tracking budget releases in real time to proposals, and the proposals of even using it in the elections. Advocates say it guarantees transparency and accountability, but there are questions that remain, of course, about trust and who really holds that. As you've been pushing for fiscal transparency, Alex, now that blockchain is being floated, do you see this as a viable solution?
Yes and no at the present time. Yes, in the sense that we have reference countries like Peru in 2018 that record and monitor purchases. In Brazil, they do online bidding. And in Estonia, where they have the national digital infrastructure. And in UAE, where they target 50% of government transactions. But 20 years ago, Mikey, I attended a conference in Orlando where Michael Hammer, the author of Reengineering the Corporation, has a very good cautionary tale. It's easy to say computerize or do blockchain. But what is important is you have to clean up your process first before you do that. Because if you don't clean up the process, it's like digitizing the quill pen or cementing the cow path. So what do I mean? We can apply already the blockchain on the procurement. But if you recall, in fact, the new development is because the insertions are no longer acceptable. 2 days ago, Secretary Pangandaman told me on the phone that when they received the budget proposal, say from DPWH, the insertions were already inserted there upon submission. So they have no way of knowing which were really the ones proposed by the DPWH and the ones that are inserted. So when a congressman said, see, there will be no discrepancy anymore between the NEP and the GAA, wala kaming in-insert. And because the insertion happened before the NEP was being put together. So we have to sort of look at all the process, the end-to-end process of budget preparation. So for example, if there are master plans in the 18 river systems that we have, like the Cagayan River, the Bicol River Basin, or the Pasig, Marikina, San Juan River system, if there is a vetting process at the central office of DPWH, to say, even if you chop these projects, but there is a function that says how is consistent is this with the master plan for that whole river system, then you can, even if they're done by different contractors, then it can be effective as part of a bigger whole.
Yeah, there's so much we need to do.
Well, Babe Singson was telling us way back in Pinoy administration, the chop amount was 50 million. Now it was increased later to 150 million, meaning that district engineers can do whatever they want without clearance from the national office. So they should review those limits again, I think.
There's so much to do. There's so much to get right, because if not, it's like we're just going to be rearranging the chairs on the Titanic. Anyway,
exactly.
Alex, Alex Escucha, thank you so much for your time this morning.
Thank you.
Now we're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are doing this Friday morning. Right now, I'm seeing a lot of red. The Nikkei 225 is down by 0.1%. Hong Kong's Hang Seng Index down sharply, down by a little over 1%. Shanghai's Composite down by 0.4%. And Singapore's Straits Times Index going the other way, higher by 0.3%. Here at home, Philippine shares extended their losing streak, sliding for a fourth straight session yesterday as investor sentiment weakened. PSE index dropped nearly 1.1% to 60.42. All sectoral indices ended in the red, led by the mining and oil counter, down almost 3%. Decliners outnumbered advancers 134 to 64, with value turnover at nearly 7 billion pesos. Now, traders remain cautious amid the escalating flood control corruption scandal, while overseas the dollar strengthened after Federal Reserve Chairman Jerome Powell signaled caution on further U.S. rate cuts. Taking a look at the main gauge this morning, as of 10:37, the main gauge is in the red, down by 0.3% to 60.23. The broader all shares index lower by as much, down by 0.3% to 36.44. Taking a look at the sub-indices, the financials, holding firms, property and mining and oil counters are weighing heavily on the market, whereas the industrial and services counters are slightly limiting the market's decline. Total volume traded is at 310 million shares, valued at 1.35 billion pesos. Market breadth is bearish. We've got 80 decliners, 54 advancers, and 50 stocks unchanged. Taking a look at the currencies, the peso opens at 58.28 against the greenback, down from its previous close of 58.10. Now, several areas in the Luzon and Visayas are now under storm signal number 3 as severe tropical storm Opong continues to batter the country. The latest update we have on the line, a Pag-asa forecaster. Hi, Benji. Welcome to Business 360. Henny Estereja. Okay, Henny, can you give us the latest position and the strength of Opong right now?
Yes, good morning po. Good morning din sa ating mga taga-subaybay. As of 7 in the morning, severe tropical storm Opong was estimated over the coastal waters of Mandaon, Masbate. It has made landfall as of 8:10 over San Fernando, Romblon, and possibly another landfall over another island in the western side of Romblon. So in the coming hours, this severe tropical storm Opong will traverse Tayabas Bay, and then eventually by afternoon it will be over the Mindoro Island. So it may make another landfall over Oriental Mindoro this afternoon. As of now, it has maximum sustained winds of 110 kilometers per hour near the center and gustiness of up to 150 kilometers per hour. Moving west-northwest at 30 kilometers per hour. So we're seeing po na after makatawid dito sa Mindoro Island, pagsapit po ng hapon is mag-emerge po ito sa may West Philippine Sea. Pagsapit po ng gabi, and then from gabi hanggang bukas ng tanghali, nasa may West Philippine Sea ito, palayo ng ating kalupaan, at lalabas ng ating PAR pagsapit po bukas ng hapon. Signal number 3 ngayon sa Sorsogon, Masbate, Albay, Western and Southern Camarines Sur, Southern Quezon, Marinduque, Romblon, Oriental at Occidental Mindoro. Signal number 3 rin sa Batangas, Southern Laguna, Western portion ng Northern Samar, Western Samar, extreme northern portion of Biliran, northwestern Capiz, northern Aklan, and Caluya Islands. Signal number 2 naman sa Catanduanes, rest of Camarines Sur, Camarines Norte, rest of Quezon, rest of Laguna, Rizal, Cavite, and Metro Manila. Signal number 2 rin po. Signal number 2 rin sa Bulacan, Pampanga, Bataan, Southern Zambales, Calamian Islands, rest of Northern Samar, northern portion of Eastern Samar, northern and central portion of Samar, rest of Biliran, northern portion of Leyte, northern portion of Cebu, extreme northern portion of Negros Occidental, signal number 2, northern Iloilo, rest of Capiz, rest of Aklan, at northwestern portion of Antique. While signal number 1 is also raised in other parts pa po of our country, sa Luzon, Quirino, central and southern Nueva Vizcaya, central and southern Benguet, central and southern La Union, Pangasinan, central and southern Aurora. Signal number 1 din sa Nueva Ecija, Tarlac, rest of Zambales, Puyo Islands, northern portion ng mainland Palawan, rest of eastern Samar, rest of Samar and rest of Leyte, southern Leyte, eastern and central Bohol, central Cebu, northern portion of Negros Oriental, northern and central portions of Negros Occidental, central portion of Iloilo, central Antique, Dinagat Islands, and Surigao del Norte, signal number 1. And as of now, we have heavy rainfall warnings raised over many areas of our country din po, no? Red rainfall warning, ibig sabihin torrential rains within the next 1 to 2 hours over Samar Island, Biliran, Leyte, down to the upper part of Cebu, northern portion of Negros. The entire western Visayas also has red rainfall warning, then orange warning over the rest of Visayas, and some areas pa po of Masbate, whereas yellow warning is raised naman over the rest of Bicol region, Romblon, Oriental Mindoro, and Occidental Mindoro, as well as Quezon and Marinduque provinces. That's the latest from Pag-asa. Balik po sa inyo.
Okay. Hi, Benny. Benny, just wanted to ask you, just to put the rainfall warnings into context, habang andito pa si Opong, how much rainfall can we expect in Metro Manila and the surrounding provinces?
For Metro Manila, the nature of the rainfall will be occasional po, no? So, ibig sabihin, hindi siya tuloy-tuloy na pagkulan within the day. Posible siyang umabot hanggang 100 millimeters. So, itong dami ng ulan na binabagsak is equivalent to like 100 liters per square meter for a 24-hour period. At ito po yung mga nagkakos ng mga flooding in certain areas, lalo na po sa mga mabababang lugar, at possible din yung landslides, lalo na kung saturated po yung lupa nila.
Okay, Benny, thank you so much for that update.
Salamat po.
On the corporate front, Ayala Land is stepping up its share buyback program, purchasing 2.3 million common shares in the market. The company bought shares at prices between 25 pesos and 75 centavos and 26 pesos and 35 centavos each. The biggest block, 1.34 million shares, was acquired at 26 pesos per share. After the transactions, Ayala Land's outstanding shares stood at 14.53 billion, while Treasury shares rose to 2.18 billion. Now, Mega World Corporation is continuing its share buyback program. The company says it purchased 993,000 common shares from the open market on September 25th at an average price of 2 pesos per share. The buyback program was approved by Mega World's board of directors just a day earlier on September 24th. President Ferdinand Marcos Jr. pushes for stronger support to farmers under the Sagip Saka Act, aimed at boosting food security and keeping prices affordable. The president discusses agriculture in a palace meeting with cabinet officials and lawmakers. Among those present, Executive Secretary Lucas Bersamin, Agriculture Secretary Francisco Tu Laurel, Agrarian Reform Secretary Conrado Estrella III, and Senator Francis Pangilinan, who chairs the Senate Committee on Agriculture. Marcos orders a review of the agricultural tarification law and approves the creation of AgriCom, a new commission tasked with developing broader reforms for the sector. Now, the U.S. is boosting Indo-Pacific security, and the Philippines stands to benefit. Washington announced a $55 million fund, about 3.2 billion pesos, to help countries like the Philippines, Vietnam, and Malaysia fight illegal fishing, trafficking, and other maritime crimes. The funding was unveiled at a maritime cooperation meeting during the 80th United Nations General Assembly in New York, co-hosted by the U.S. and its allies, including the Philippines. U.S. Secretary Marco Rubio warned about China's unlawful maritime claims and called for a stronger coalition to safeguard navigation rights and global trade. For the Philippines, this isn't just about security. It's also about protecting trade routes, with most of the country's imports and exports passing through contested waters. Now, we're taking a short break. Business 360 will be right back. Welcome back. Lawyer Pechi Rose Espera denies notarizing the explosive affidavit of Orly Guteza Zaldico's former security aide, who accuses lawmakers of moving suitcases of cash from flood control kickbacks. Escudero told the Senate Blue Ribbon Committee that her name and notarial seal were fraudulently used on the document. In the controversial affidavit, Guteza alleged that 46 suitcases of cash from Congressman Eric Yap were sent to Ko, then delivered to former House Speaker Martin Romualdez. Guteza was brought to the Senate by Senator Rodante Marcoleta and introduced by ex-Congressman Mike Defensor, who has himself been linked to the discredited Ador Manaway whistleblower scandal in 2001, when false allegations were used to smear political figures. The hearing highlights how questions over the credibility of witnesses can undermine the broader flood control corruption probe, even as public outrage continues to grow over the 100 billion peso controversy. A former public works official blows the whistle on a massive kickback scheme, naming senators, congressmen, and even cabinet officials. Former DPWH Undersecretary Roberto Bernardo claims former Senate President Francis Escudero got a 160 million peso kickback through campaign donor Maynard Mu. He says former Senator and now Makati Mayor Nancy Binay staff demanded a 15% cut worth 37 million pesos from projects totaling 250 million pesos. Bernardo also accuses Representative Zaldi Ko of asking for a 25% commission and former Senator Bong Revilla of taking 125 million pesos in kickbacks for his re-election. He adds that Education Undersecretary Traiguiv Olivar got 425.5 million pesos in commissions from a 2.85 billion peso project list for the Office of the Executive Secretary. All politicians named have denied the accusations. Bernardo is now seeking protection and says he is ready to cooperate with investigators. Now, the flood control scandal widens. The National Bureau of Investigation now recommends charges against Senator Francis Escudero and former Senator Nancy Binay for indirect bribery and malversation of public funds. The case stems from alleged anomalies in flood control projects as revealed by former Public Works Undersecretary Roberto Bernardo. Justice Secretary Jesus Crispin Remulla confirms that all persons named by Bernardo are included in the list of those to be charged. Among others implicated, Representative Zaldi Ko, former Senator Bong Revilla, Education Undersecretary Traiguiv Olivar, and Commission on Audit Commissioner Mario Lipana. Congressman Zaldi Ko is now under watch, with reports saying he may have traveled to Spain amid graft and bribery allegations tied to the flood control projects. Justice Secretary Boying Remulla confirmed Ko is being tracked with help from various sources. Ko faces a complaint for graft, malversation, and indirect bribery at the Department of Justice after testimonies linked him and other officials to alleged commissions from public works contracts. An immigration lookout bulletin order has been issued at the request of Public Works Secretary Vince Dizon. Ko has denied all accusations, calling them false and baseless. Former FBI Director James Comey is indicted by a federal grand jury, marking the biggest escalation yet in President Donald Trump's push to prosecute his political enemies. Comey, who led the 2016 investigation into possible Russian collusion with Trump's first presidential campaign, becomes the first senior U.S. official to face federal charges. He has reportedly been charged with making false statements and obstruction of justice. Despite the indictment, Comey insists he is innocent.
My family and I have known for years that there are costs to standing up to Donald Trump. But we couldn't imagine ourselves living any other way. We will not live on our knees, and you shouldn't either. Somebody that I love dearly recently said that fear is the tool of a tyrant, and she's right. But I'm not afraid, and I hope you're not either.
U.S. President Donald Trump says he will not allow Israel to annex the West Bank. Trump tells reporters at the White House he had good talks on Gaza with Israeli Prime Minister Benjamin Netanyahu. Palestinian President Mahmoud Abbas meanwhile pledges to work with Trump and other countries on a peace plan for Gaza.
I will not allow Israel to annex the West Bank. No, I will not allow it. It's not going to happen.
Did you speak with Netanyahu about this directly?
Yeah, but I'm not going to allow it. Whether I spoke to him or not, I did. But I'm not allowing Israel to annex the West Bank. There's been enough. It's time to stop now.
A defiant Greta Thunberg is heading back to Gaza, adding that she is not scared of Israel. She is sailing with an international aid flotilla toward the enclave. Thunberg is calling the voyage a last resort to show that there is still some humanity left. The flotilla is currently using about 50 civilian boats to try to break Israel's naval blockade. This is the third time Thunberg travels in a boat that attempts to break through the blockade.
I'm not scared of Israel. I'm scared of a world that has seemingly lost all sense of humanity. And what we are doing here is trying to show that there is still some humanity left, that there are still people willing to step up when all other means fail. But this is a last resort. This mission should not have to exist.
On another front, Starbucks is shrinking its footprint to revive its brand. The coffee giant announces it's closing underperforming stores in North America. That includes its iconic Seattle roastery. CEO Brian Niccol is leading a restructuring plan expected to cost $1 billion, aimed at restoring the chain's traditional coffeehouse feel and winning back customers. Starbucks says its total U.S. and Canada store count will drop by about 1% or several hundred stores by the end of fiscal 2025. Now, this is a reminder of how global brands adapt to shifting consumer habits, a trend that could also affect operations and investments in emerging markets like the Philippines. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo news channel, and have a good weekend.